I'd pick this one dividend ETF to buy and hold forever. Dividend ETFs are one of my favorite types of ETFs, and everybody by now should know the power of them. From paying out cold hard cash that could be as much as your full-time job, to growing your wealth from capital appreciation alongside getting paid passive income on the side from dividends. So I've been thinking to myself, what's one dividend ETF that I would buy and hold forever, since I plan on retiring someday because of my ETF portfolio, which does pay some dividends along the way, a very small portion though, and I also have a very small portion of my portfolio tied to dividend ETFs. I prefer buying both broad market ETFs and growth ETFs, considering my age is pretty young at 24 years old, and I do have a very higher risk tolerance, which is not suited for dividend ETFs right now, but as I get older, I will allocate more of my money to dividend ETFs in the future. Now I know what you're thinking, dividend ETFs sound way too good to be true. Passive income, you could get some high dividend payments, you could retire early from dividends, you could just do so many things, but really, what's the catch? Well, one huge mistake is investing in a dividend trap. A dividend trap is a stock that offers a high dividend yield that's not sustainable, causing the stock price and dividend payout to decline, where overall you're actually losing way more money than you're actually earning from dividends, which is a horrible and not so good thing. Walgreens stock, for example, has a high and attractive dividend yield of over 7%, but the share price is just falling and falling so much from the company's poor financial and earnings performance. Yeah, don't invest in a stock or chart that looks like that one. From that, I have a few criteria to find out which dividend ETF I would buy and hold forever, and by the end of the video, you'll know my answer, so let's get started. Starting off, besides a dividend trap, a type of dividend ETF that I would not buy and hold forever are going to be covered call ETFs. Now, a covered call ETF is an investment fund that uses a covered call strategy to generate income for investors. It holds a portfolio of stocks and then sells call options on those assets, which generates premiums, which are then distributed to investors as income. The huge downside from covered call ETFs is that they limit upside potential in the form of capital appreciation because they involve selling call options on stocks that are held in the fund. For example, QYLD, the Global X Nasdaq 100 covered call ETF versus the normal Nasdaq 100 ETF of QQQ by Invesco, you would have made way more money over the last 5 and even 10 years if you just invested in the non-covered call ETF option of QQQ over QYLD. Most covered call ETFs also lack dividend growth, so your dividend income isn't really growing that much at all over time. You'll also be paying way more taxes on these covered call ETFs, since most of these funds' dividends are paid out as unqualified dividends, which has a higher tax implication. However, the benefit of covered call ETFs is that high dividend income, which are easily over double digits for that sweet passive income. These aren't my cup of tea right now, but they can be something for investors who want that high dividend income right now rather than the future. Some of the best covered call ETFs are going to be all the ones on your screen that pay high dividend income with capital appreciation as well. Now, if I had to choose only one covered call ETF to buy and hold forever, it would definitely be JEPQ. With all that out of the way, here's my criteria for choosing just one dividend ETF to buy and hold forever. Number 1 is diversification. That's pretty obvious, but that's really important to me and should be to you as well. Number 2 is strong historical performance. Now, past returns are never an indication of future results, but we want to make the most amount of money right now and hopefully in the future. Next is positive price growth. Now, the fund must have positive share price appreciation and also dividend growth as well, since we want to avoid dividend traps as much as possible. Number 4 is dividend growth. Dividend payments are amazing and great, but if we can grow that dividend income more and more in the future, that'll be more ideal to beat inflation and just grow our wealth. And lastly, number 5 is a low expense ratio. Here's a list of some of the best dividend ETFs that fit all these criterias that I would love to buy and hold forever and can be a great option to provide excellent returns, reliable and stable dividends, and a safe bet to make more money over time in the stock market. However, out of all these dividend ETFs, I'm only going to be choosing just 2 that I personally have my own money in because I'm all about transparency and putting my money where my mouth is. The first ETF is schd, Charles Schwab's US Dividend Equity ETF, and DGRO iShares Core Dividend Growth ETF. Currently, I have around 125 shares of schd, where I have around $3,500 invested in this ETF, and I also have around 36 shares of DGRO at over $2,300 invested in this ETF as well. I don't have too much money right now in these ETFs because I prefer broad market and growth ETFs for my stage in my investing journey, but I still want some skin in the game to these dividend ETFs as my investing journey continues. Now I'm going to do a head-to-head with these two ETFs into a new criteria scorecard of diversification, dividend yield, dividend growth, expense ratio, total returns, and my own ranking out of 5 stars to round up this head-to-head. And by the end of this video, you'll find the winner of this head-to-head, so once again, let's get started. Kicking us off is schd. This fund invests in high-quality dividend-paying companies where these companies offer a high dividend yield and they also have strong financials and great business models. Moving on to DGRO, this fund invests in high-quality US dividend-paying companies that have a history of consistently growing their dividends across many different industries. In terms of its diversification, schd has 103 different holdings. Some of its top stocks are Pfizer, Chevron, Cisco Systems, AbbVie, and Amgen. It also has a broad range of different sectors of the stock market with relatively equal exposures for that added diversification. DGRO has 407 different holdings, so a lot more than schd. Some of its top stocks are JP Morgan Chase, Broadcom, Johnson & Johnson, ExxonMobil, Microsoft, and Apple, where it also has a broad range of sectors as well. This is a very tough choice because both these ETFs are really diversified, but since DGRO has the higher holdings than schd and a higher allocation to technology, which is a crucial sector for returns in the stock market over the last decades, I'm going to give DGRO its first point on the board over schd. In terms of dividend yield, schd has a dividend yield of around 3.5%, DGRO has a dividend yield of around 2.2%, so slightly less than schd. Well, that was super easy, so I'm going to give schd its first point on the board over DGRO. Up next is dividend growth. schd has the dividend grade of an A+ by Seeking Alpha and a great chart of dividend growth. schd also has a dividend CAGR or compounded annual growth rate of dividends of over 11% over the last 5 and 10 years. DGRO, on the other hand, also has an A+ dividend grade as well by Seeking Alpha, and also a great chart of dividend growth as well. DGRO has a dividend CAGR of over 8% over the last 5 years and over 18% over the last decade. But since the most recent years are higher for schd, where it beats DGRO for a higher dividend CAGR over the last 3 and even 5 years, and schd also has 13 years of consecutive dividend growth and dividend payments, which is 3 years longer than DGRO. So I'm going to give this point to schd for its second point over DGRO. The next category is the expense ratio. Of course, the lower expense ratio means we're going to have to pay less fees and less expenses on this ETF over the course of our investing journey. schd has a very low expense ratio of just 0.06%, which gets an A+ expense grade by Seeking Alpha. DGRO, on the other hand, has an expense ratio of just 0.08%. It's very obvious on the winner of this category, which is going to be schd over DGRO for its third point on the board with a lower expense ratio. In terms of its total returns, the formula to find out the total returns of an ETF is going to be the share price appreciation plus any dividends earned along the way. Over the last 5 and even 10 years, schd has returned over 11% annually. DGRO over the last decade has returned over 11.1% annually and over 10.4% annually over the last 5 years. Now I'm going to be putting both of these funds head to head. DGRO has beaten schd over the last 10 years, while in the last 5 years, schd made a huge comeback, just barely beating DGRO. Over the last 3 years, DGRO is opening its stride by outperforming schd once again, even solidifying its performance over the last year, once again coming out on top. So with that, I'm going to give the total return point to DGRO over schd. Overall, I give schd a 5-star ranking. It has a low expense ratio, an amazing basket of high quality and higher yielding dividend paying companies, and can overall be a staple in your ETF portfolio. For DGRO, I give this fund a 5-star ranking as well. You can't go wrong with DGRO because it has dividend growth in the title of the ETF. Overall, it has a great basket of high quality dividend paying companies, almost every sector of the stock market, including technology, which is pretty rare to see for a dividend ETF, and a great choice for dividend ETF focused investors. Tallying up all the scores, schd comes in with a total of 3 points, while DGRO comes in with a total of just 2 points. So the winner is schd, Charles Schwab's US Dividend Equity ETF. And yes, my one dividend ETF that I would buy and hold forever would be schd. If I had to choose 2 ETFs, it would be DGRO as well. The third would be FDVV if I had to choose one, and the fourth would be JEPQ if I had to choose 4. Now I know what you're thinking, why do I combine or even invest in both schd and DGRO for dividends? Now if you guys want to see my entire ETF portfolio, which includes both schd, DGRO, and so many other ETFs, you can download the Blossom app using the link in the description of this video, where you can see my entire ETF portfolio, exactly when I buy ETFs like these ETFs I just showed in this video, and so many other more, and you can just have so many benefits on this app for completely free. Yes, only free with Blossom. Check out the link in the description of this video. See you there. Now if you guys like this video, please give it a like because this cute puppy did. Now if I had to choose just one ETF to buy and hold forever, it would be this one in this video. Now if I had to choose one growth ETF to buy and hold forever, it would be this ETF in this video. Have a great rest of your day, continue to crush in the stock market, and take it easy. Peace.